You meet with so many founders and so many founders reach out to you. When they come and talk to you about the business idea, what are the three or four things you're looking in that founder?
In this startup ecosystem, what we have realized, or rather my learning, is that ideas don't fail because they are small. They fail because they are shallow. I think in reality, good ideas are more like earthquakes. They come from the pressure that has been building underground for a very, very long time.
Let's talk about 0 to 1. What makes a good business idea? Kashyap, you meet with so many founders and so many founders reach out to you to pitch to you to get into your accelerator. When they come and talk to you about the business idea, what are the three or four things you're looking in that founder and that business idea specifically before you say yes or no to them?
Right. So I think, I come from a marketing communication background. My first venture was a marketing communications company where we always talk about big ideas and then we build campaigns on those big ideas. Okay. So we come with that mindset. But, in this startup ecosystem, what we have realized, or rather my learning, is that ideas don't fail because they are small. They fail because they are shallow. Now, and also I think everyone talks about ideas like lightning strikes, but I think in reality good ideas are more like earthquakes. They come from the pressure that has been building underground for a very, very long time. Okay, so it starts with that consumer tension, irritation, where someone will say, why is this still broken? Okay, that's where the whole journey starts. And how do we validate ideas? I think in my first book, I introduced a concept called idea quotient test. I call it the IQ test. Okay. So in that IQ test, we kind of try to validate an idea from broader 5 parameters. So test has 5 pillars. One is, what is your innovation quotient? Is there real insight here or just novelty dressed as innovation? Second is the value quotient. Who genuinely wins if this idea exists? And can that idea be clearly articulated in simple terms? So I think value to your customer is a very, very critical component. Okay. Third, we call it the market quotient. Is this idea scalable, definable, reachable? So I think, is there a potential for this idea? How big is the market for this idea? So I think we need to validate that idea from that potential point of view. Then obviously startups don't like this, but the fourth pillar is profitability quotient, where I don't know, somehow startup founders still are not very familiar with this term called profitability. But I think that's a very, very critical part of any business venture, because ultimately you need to make money. So I think, what is the right unit economics? Probably early stage you may end up making losses, but if your unit economics is right and if you can scale it with the right resources, I'm sure there's a high profitability there. So I think we very carefully try to understand that profitability quotient. And finally, the fifth quotient, which I call it the X factor. Okay. Now that X factor is primarily timing. Okay, and I think because the same idea can look stupid in one decade and brilliant in the next decade. So ideas just don't need to be right, they need to be right today. So I think that timing matters a lot, and I think, Anshuman, you will also agree with me that we have seen a lot of great ideas introduced ahead of its time which did not do well. So, for example, I am a product of the first internet wave of India. My first job was in 2000 in a company called ideasinu.com, where we hardly had an internet connection in my small hometown. Okay, to upload 100 KB image was like a Herculean task. Okay, and
Right.
there we were talking about e-commerce, where even I did not have a credit card in those days. So I think there were great ideas, but the whole market, the ecosystem, the infrastructure was not ready. So I think the
Hmm.
timing matters a lot. So if we evaluate ideas from a multiple angles like this, from a innovation to value to market to profitability, and most importantly, the business environment, the X factor timing, then you can, kind of arrive at a hypothesis. I will call it a hypothesis because no formula can tell you that which idea will work or not. Okay,
Hmm. Hmm.
right? Because there is
Yeah,
no equal to MC square for an idea, right?
you're right.
So after doing all this, ultimately, then we'll use our gut feeling or we'll use our intuition to decide that okay, this idea is worth pursuing or not. But there has to be a structure or process to kind of evaluate an idea. So IQ
Right.
test is like that structure that we've created to figure out. So
Hmm.
ultimately, a startup idea isn't successful because it's smart. Okay, it wins when the insight, the market, the money, and the timing all decide to show up at the same meeting.
Right, 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 right. So true, and so deep. You talk about the brand before the product, the brand narrative. Define that. Even before building the product, why it is so more important today, and how a founder should go about it. The new game, as you call it.
So, so I think uh, branding as a concept is quite misunderstood broadly, because I think there are terms alternatively used: branding, marketing, advertising, communication. I think what is important is storytelling or the narrative that you build to touch your customers. So in today's
Hmm.
world, if you don't tell your story early, the market will tell the story, which probably is not very flattering. So,
Right.
we always say in our branding world that if you don't brand yourself the way you want to, others will brand you the way they want to. And that's why it's very important that you have a control on the narrative of your brand, your product, your company. Okay, because people don't experience your product first anymore. They
Right.
experience your story, your belief, your intent. So even before your product or service reaches them, the story reaches first. So that's
Hmm.
why it's very, very important that how do you build that. Now here also, I think what you realize is most of the startup founders are techies. So a branding concept is kind of an alien concept for them. So there,
Hmm.
we have kind of believe in a very simplistic thought called minimum viable brand, just like minimum viable product.
Okay.
Okay, what is minimum viable brand? It's not about logos or colors. We always tell the founders that ask some basic simple question to yourself and try to figure out the answers on your own. What do we do? What do we stand for? Who is your primary target customer? What promise are we making to the customer? Why should anyone trust us before the product proves itself? Simple questions, if you try to answer, you kind of create your own brand story. Because I think, because in today's cluttered market, the attention span is too small. So brand is no longer what you say after the launch. It's the context in which the product will be judged or perceived.
Hmm.
So I think as a founder, one needs to put equal energy, effort, and thought in building brand narrative compared to the effort we put in developing the product. Because I think this is what our observation, especially dealing with early stage founder, because I'm sure you also deal with a lot of early stage founders. They talk a lot about their product and features and technology, but the
Hmm.
whole how they're going to communicate this great product to their customers, that's where they sometimes need a little more hand holding.
Right, right. So one is the brand narrative, the other one is positioning. How they are different from each other, and how to guide a first-time founder in coming up with their positioning statement very, very quickly and early in their product life.
Correct. So I think positioning from a textbook point of view, I always say that positioning is the space you occupy in someone's mind. Okay. So I think every brand will have one attribute attached to it over a period of time that stays in the consumer's brand mind. Okay. So now how do we arrive at that positioning? Okay. So positioning is not just that statement. Positioning is it's a journey where you take certain steps to arrive at an experience which is registered deeply in the mind of your target customer. Now what are those steps, or how do you arrive at that positioning statement? I think first step would always be to define where you stand in the whole market, your competitive landscape. Okay,
Mhm,
because you need to understand in what context your positioning is going to be. Two, what benefit you try to highlight amongst, compared to your other competitors, indirect competitors, other brands. It could be functional, it could be emotional, it could be speed, convenience. We need to pick one strong attribute. Okay. So, for example, in these days, these quick commerce brands, for them,
mhm,
it's like Blinkit means 8 minutes. So they occupy that within 10 minutes something is delivered. Okay, so they
right.
don't talk about convenience, cost saving. They don't talk about multiple things. So
Mhm,
as a founder, one needs to understand that I cannot be multiple things. I need to have one clear word, attribute, or a benefit that can strongly registered so that I can start, owning that space. I can start creating a unique position. In fact, a lot of time, if you see some of the players, uh, they kind of create a market, a new market. So, for example, though WeWork is not, discussed very favorably, but if you see,
mhm.
we were kind of introduced a concept called co-working, but Regus was always there as a business center.
Yes,
Okay,
yes.
correct, and much bigger and larger business center, more probably efficient. Okay, but when WeWork came, they created a brand narrative as if this is today's generation's place to work. A very different. Ultimately, it was a business center. Okay, so they kind of created a new category, and that new
Mhm,
category created a positioning that okay, the co-working leader is WeWork. So I think there could be multiple approaches to come up to your positioning statement. And as I said, it need not be a statement. For a positioning statement, there are multiple, theoretical approaches to arrive at it. But most important is your customer is not interested in your positioning statement. They are not going to remember, what you're telling on your website or on your brochure. They want to remember
mhm,
one simple thing, one word, one phrase.
mhm.
Can you get that right? And that's the key challenge.
Right, right. GTM blueprint, how to launch smart and not loud. For a idea stage or a pre-MVP founder, should they start working on a GTM at that point of time, or when does the GTM should kick in? Is it even before trying to build the product or the platform? What in your mind, Kashyap? When should a founder start thinking about a GTM? Because obviously there is no point in building something if you can't take it to the market, if you can't sell. So when that idea should kick in.
Absolutely. So I think GTM is something very close to my heart because I, I believe that uh, we exist in business to serve the customers. And if you can't go to the market or go to the customers, the whole purpose of creating the product is defeated. So I think GTM is probably one of the most underrated or topic. So, for example, if you see most of the pitch presentations, a startup founder would invest 15 minutes talking about the market opportunity, the SAM and CAM and what not, and their product features and all. And the GTM slide says digital marketing,
Right.
right? So I think probably it's time that a founder start understanding that GTM is not a marketing afterthought.
Mm-hmm.
It's a business model in motion. Even for an idea or a MVP stage, guys, a good GTM is very very critical, because it's about designing your first few customer moments deliberately. Now, how typically GTM actually works for startup founders? Okay, one, obviously GTM should reduce the risk.
Mm-hmm.
And you know how you can do that. So if your GTM purely depends on your ads or algorithm or virality, you're doing something not right. So I think a lot of time early stage startup founders, one, for them GTM is plain vanilla digital marketing playbook which doesn't work. Two, they sometimes feel that okay, early stage I'll use this kind of automation or process led GTM which most of the leaders are following. I'll just copy the best practices of the industry and I'll get the result. It never works. Why? Because you don't have the resources and capabilities to run that. So whatever you're doing is subpar. It's not going to get your results. So what is the most effective GTM strategy? It's a founder-led selling, and it's not optional. If the founder is hesitant or of marketing or promoting or selling the product or the services, GTM will never work. We always
Mm-hmm.
say your first few customers are in your contact book. So founder needs to understand that.
Mm-hmm.
Once you crack that, once you have those first 10 100 customers which you painstakingly pursued and closed, then only you can start thinking of having a playbook. Before
Mm-hmm.
that, no playbook will work. Also, I think one very big neglected part in the whole GTM game is the distribution. Probably because a lot of founders are first time founders. So for them, the product development and the marketing and the branding is the game. But the real game is distribution. If you're a B2C guy, distribution
Mm-hmm.
is the key. Even for a B2B player, a channel partner distribution strategy is a very effective strategy which need to do, crack even before you launch the product. So I think GTM will kind of take you to a profitability path. Unless you can crack that, uh, you will not be able to survive or sustain, because markets sometimes whispers before they scale. But can you
Right.
hear it as a startup founder? I think that's very, very important. So a smart GTM doesn't try to sound impressive. It tries to sound true.
Mm-hmm. Wow. Okay. Got it. You are on both sides. You coach and mentor startup founders, and then you also run an angel network and a venture studio, Kashyap. So fundability. Let's spend some time on this. What investor look before cutting a check? You run an angel network and a venture studio. What do you look in a pitch deck before you ask the founder? And after that, you ask the founder to come and meet with you or talk to you. What are those characteristics, or what catches your attention in a pitch deck?
Correct. So I think when we look at startups from an investment point of view, there are two aspects. One is the pitch deck, which is the trailer, okay, but we would like to see the whole picture also, right? So that's one part. Obviously, pitch deck is very important because it generates that curiosity and interest, so that we can kind of deep dive into it. So again, in the pitch deck, there are few slides which we would certainly like to dig deeper. One is definitely the point that we discussed earlier, GTM, that how clearly the GTM is defined, their roadmap. Then would be their unit economics and their business model, because a lot of time, you know, the operational model doesn't allow you to scale or reach profitability in the long run. So I think that visibility should be clear, and obviously the financials, numbers, and everything. So I think every venture will be looked at very differently when it comes to pitch deck, but we always believe that there is much more beyond pitch deck that we would like to look at. So if we find it interesting, we would love to hear the customer story also, that actually what kind of value they are getting. Okay, so there is another aspect to it. But most importantly, I think what hooks us is, we call it the 3C, uh, the clarity, the conviction, and the capability. Clarity in terms of how clearly you can explain the problem you're solving without using any startup jargon. So if the pitch deck needs 5 slides and 10 buzzwords, probably you're not very clear enough. So, so I think clarity on each slide is very, very important, because it shows the thought process of the startup founders. Two is the conviction. How do you know your customers actually that well? Okay, no assumptions, no trends, no research reports, but actual lived insights, conversations, observations, behavior. Okay, because convictions comes from proximity. You can't be emotionally invested in a problem you only read about. So we would like
Right.
to see, so I think that that conviction is reflected in the way a founder, talk about their idea or when they pitch. And third and most important is probably the third C, which is capability. Why is your team the right team to fix this problem? And I'm not talking about pedigree, I'm talking about preparedness. Because this pitch deck will show us that how well prepared you are. Because markets forgive early mistakes, but they never forgive slow learning. So I think we would like to see that whether that startup founder, besides the skill set, okay, what kind of mindset they have to survive, adopt, pivot, learn, relearn, so that they can stay on the path to reach profitability and a certain scale. So I think if these three things align, we become more curious about engaging with that startup, because I think, as we know, that you cannot capture a, the future in your pitch deck, right? So pitch deck will give us an opportunity to understand the mind of the startup founders, the capabilities, the conviction, the interest, the commitment, and I'm sure if those things are aligned, the journey can be different, but obviously on a higher path. And mind you, money cannot fix this. Money cannot fix the momentum. Advice cannot fix, uh, you know, uh, direction. Okay, so I think there is a misconception that you give me money and I'll solve everything. Probably money will amplify or magnify your problems. Okay, so I think those who lack that clarity, conviction, I think only money or advice will not solve that problem. So I think we broadly try to look at a pitch from a holistic point of view. Also, I think one very important thing in the pitching is pitch from a product point of view or a pitch from a customer point of view. So,
Mhm.
being a branding professional, we always say that we start with customer in mind. So we love a founder who starts the journey of narrating their product or services, keeping the customer in the center. Because if that is done right, the rest of the things will automatically fall in place.
Right. Kashyap, I have a personal question here. I'm thinking about a pitching paradigm shift. And what I mean by that, after sitting in 1,000+ pitching events and pitch judging, everybody starts with a problem and a solution, then traction, and then a team, and then the ask, and then a thank you slide. I feel obviously there are different startups in different stages of their life, but if you have a growth oriented revenue numbers and if you start to catch the attention of the investor, last year my revenue was 1 million ARR. We have built this product to solve this problem. If you start with that narrative, what is your thought on that?
So I think absolutely, I think this is bang on because the traction, the true numbers, they don't lie. Okay.
Right.
Now, validation comes from that only. No matter what kind of narrative we build, but ultimately, if we are unable to translate that narrative into numbers, the whole purpose is defeated. So, even in a pitch deck, or rather in any interaction, we always tell the founder, what is your strongest point?
Yeah.
Your number is your strongest point. Put that on the first slide, or talk about it earlier, because that will hook the whoever is your audience is. For example,
Yeah.
sometimes not the number, sometimes the founders are the kind of right hook, because they have
Yeah.
the right credential, right experience, right, probably everything that is we looking for. So I think they start with their journey, that why we are the best guys to solve this problem. Now we know that probably right now in the pitch, probably they are not solving the problem entirely, but because these
Mhm.
guys are qualified, experience, domain expertise, everything that we need, they'll figure it out, because nobody figures out everything on day one.
Mhm.
I think so. So whole, in fact, nowadays, so Anshuman, whole pitch deck thing is also gone. Nowadays, we prefer you send a two-pager note. We don't
Mhm.
have time to look at your fancy presentation, because the kind of time and money and effort the startup founders invest in creating pitch deck is completely a waste. Can you articulate
Right.
your idea in one page? If the idea is good, and if there is a right hook, and as you correctly mentioned, if first slide says that I'm growing at 40% month on month, I don't need a second slide.
Yeah, yeah, so true. So, and you basically answered a part of my second question that, often the product is early, the traction is minimal. Still, some of the founders are most fundable. What happens there? Other than the pedigree or their past experiences, they are 2x founders. Take a scenario of somebody, it is their first sortie, still they are loved by the investor. What happened there? The product is in very early stages, the GTM is there, the traction is minimal. Still the founder is fundable. What happened there? What triggered?
Correct. So I think at early stage, fundability is less about proof and more about probability. Okay.
Hmm.
So some founders increase the odds, and you feel it instinctively. Now, how do we kind of try to figure that out? First, relevant experience in the domain. Okay. if they've either worked in the industry, faced the problem personally, or so then they are not discovering the domain. They are kind of excavating the domain. So I think that's very, very important that do you. So for example, in our BrahmVeda Venture Studio, we launched very recently, we launched another venture. We first onboarded two co-founders. Okay.
Hmm.
And when we onboarded them, we were not very clear about exactly what would be the product. We were broadly figured out the sector that we want to play. We kind of figured out the broader problem that we want to solve. But then we thought if we have the right founders with relevant experience, they will figure out the right product. So I think relevant experience matters a lot. Two is the existing relationships, because early users, early partners, channel access, industry mentors, early traction. I think there, again, it matters a lot that what kind of relationship we bring to the table so that my early stage journey is little less bumpy, right? So that's the second part. uh, Third is definitely and very critical is complementary skill set, because what we've seen a lot of cases that all three techies. So it's great when you're building a product, right? But then who is going to market it? Who is going to look at the operational side, right? So I think this is something which we definitely look at, that okay, is there a complementary skill set? In fact, again, giving my own example, in a BrahmVeda Ventures, we are three co-founders. So Vipul Kapoor is a very successful techie with a product development experience building a global product and obviously successful exit.
Hmm.
Nachiket, he's a hardcore techie, probably one of the best AI guy in our region. Okay,
Hmm.
hands-on techie. And third is me, who is more of a GTM, a branding guy with a strong ecosystem connect. So I think we
Hmm.
all three bring a very different skill set, a different experience. So I think similarly, we would like to see that same thing in startup founders, that
Right.
do we have complementary skill set. Then I think one thing which is uh, 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 very important, but how do we figure that out is critical, is that thinking ability. Okay, so we
Hmm.
then would like to ask them certain questions. We want to probe them in a way to understand how they think. Okay, we want to see that is it a scripted answer, or are they kind of thinking and coming up with a solution which could be very interesting. We ask them something which is unexpected, and we want to see whether they are panicking or thinking or what kind of solution they're coming up with. Now, that solution may not be the right solution, but we want to understand their thought process, because I think that thinking ability will take them very far. And obviously, I think most important fifth part is the learning and adaptability. I think Anshuman, you will
Hmm.
agree that no matter what we plan, the market dynamics, the business environment will definitely change. So,
Hmm.
do we have that bandwidth to change with the market changes when the assumptions break? You know,
Right.
right? So, how confident or how capable we are or how equipped we are to handle that, I think that's very, very important. So I think broadly we believe that a balance between a dreamer and a doer.
Right.
Okay. So that's the kind of right balance you would look at, and then they become fundable in a way.
Yeah. 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 How to raise the angel or the seed funding smartly? What is the funding playbook, Kashyap, from your point of view? We have founders listening globally. Uh, what is the smartest way? How they should go about? How they should approach the funding road?
From a startup point of view, you're asking from a startup founder point of view, right?
Yeah, yeah. A founder is coming and pitching to so many angels. Many a times I feel that they haven't done their research on the angel investor or the group. They don't know the investment thesis of that angel group, and still they are asking for time. So, do you have a funding playbook that, hey, you're a startup founder, I'm mentoring you. This is the playbook that you should follow to get funded.
Right, right. So I think so. Funding is the most talked about topic in the startup circle. Every founder wants funding. Okay, now when there is so much buzz about funding, obviously there are a lot of there is too much lot of crowd, too many founders chasing too few investors. Now, in that race, how do we differentiate as a startup founders, right?
Mhm.
So, see, one is you should know, especially in the early stage, who is your right investor for your venture.
Mhm.
Okay, you cannot go to everyone. So that could be, as you mentioned, there could be 20 angel platforms, there could be 10 early stage VCs, there could be 100 angel investors. First of all, you need to figure out that what kind of money you want. Do you want just money or money plus?
Mhm.
Right now, money plus will have a very different journey where you're looking at a different set of founders, a different set of investors. You know, also besides the money plus thing, if you are looking at early stage VCs or angel networks, as you mentioned, they have their own thesis. Now, the guys who are not looking at a, let's say, a health tech idea, because some of the health tech idea is a longer gestation period, and some VCs are not very comfortable with that sector. There is no point knocking those doors. In fact, if you're a health tech guy, you should know exactly which are the angel investors who are looking at health tech segment very closely because they understand the domain well compared to the other guys. Which VCs will have a thesis which clearly states their interest in the sector. Also, I think
Mhm.
one very important thing is as a VC or a early stage VC or angel network, we build a portfolio, right? So, for example, most of the guys will have a sector agnostic approach because India is not yet there where we have a lot of purely sector focused funds because everybody wants to
Mhm.
play safe as of now. So majority of the
Right.
funds, if you see, they're sector agnostic funds because India still the investment space is evolving. Now, when you're talking to these sector agnostic guys, they also have a multiple sector focus, but then you need to understand that if they've already invested in a particular sector or in a particular business model, there's less likely chance that probably they'll invest in your venture. So I think a research, if you're researching to build your product, if you're researching to understand your customers, why not also do a deep research to understand who is the right investor? Okay,
Mhm.
sending a pitch deck to 100 guys will not going to work. That is one. Two, as you know, Anshuman, nobody is going to react to a cold mail because we get a lot of cold mails, lot of LinkedIn requests. We figure out if Anshuman is my potential investor, how do I reach out to Anshuman? Can I find a common ground? So if a Surat-based founder wants to reach out to Anshuman, probably he should figure out that okay, if I reach out to Kashyap, okay, probably Kashyap can put in good words, and that will probably inspire or probably at least Anshuman will have a conversation with me. So I think finding probably a warm introduction is also very critical. So we always say that okay, only certain set of founders or founders from a certain institutions or all these IIMs they get funding. No, they don't get funding just because they are from the institute. They get funding because the VCs are from the same probably industry institution. So there is a familiarity. I can ask and check and do a background check. So I think familiarity to build familiarity is very important. Also, I think uh, we should not go to as a founder. We should not approach investors when we need money. I think it's like, the fundraising journey should begin much, much before you actually require funding. So just
Hmm.
imagine that you're building a product where you don't need funding at that point of time, but you are connected with few potential investors and you are meeting them, you are kind of briefing them about your progress, and 3 quarters, 4 quarters down the line, you met them for a couple of times, they've seen your growth numbers, and then if you talk to them about investment, there's a high probability. Because why? One, now they probably know you. Two, they've seen your growth journey. So I think this kind of strategic investment by founder is very, very important. So I think
Hmm.
blindly going to any and every investor is a waste of time. In fact, I think I would here also like to add that typically nowadays, a lot of founders, startup founders, participate in all sorts of events.
Yeah.
So some founders, we find them only in events. So I always ask them, ki, who is doing business, who is getting customers,
Right.
right?
Right.
So I think, in fact, if you check with the investors now, they are so hesitant writing checks to these guys because they are worried that if they are investing extraordinarily high amount of time attending events, whether they are really serious building the business or not.
Yeah.
Okay, I
Yeah.
think
So true.
as a founder, in fact, one of the founder recently came to me saying that okay, we are raising money. I said, you were a sponsor in one of the startup events. Why you need money? You're already sponsoring events. Okay. She said, no, I was sponsoring that event because I thought I'll meet investors. I said, no investor is going to give you a check because if I know that you're putting money in sponsoring events, okay, how can I trust you with my money that it will be utilized effectively? So I think as a founder, you have to be very, very careful when it comes to money because
Right.
investors, it's their hard earned money. That is one. And two, they know money game better than the founders. So you have to be very, very, very careful when you approach those investors. Uh, uh, so I
Yeah.
think just like you have your product roadmap, just like you have a GTM roadmap, one should also have an investment roadmap ready from day zero and start work on it.
Right. Right. So true. Let's talk about the non-metro advantage, building from Surat to the world. You built Thai Surat, you got involved with Thai Surat so early on. Uh, and you have been working in the non-metro startup ecosystem also. What do founders outside the big city, what is their advantage?
So I think one is most of the non-metro founders feel that they don't have an advantage; they have a disadvantage because they are in non-metros,
Hmm.
right? Okay, but I think if we look at broadly, so we always say that if you really want to understand non-metro founders, don't look at their LinkedIn, look at their cash flow statement. Okay, because non-metro founders are built differently. Okay, they don't have the luxury of endless experimentation.
Right.
They, the family, community, reputation, all are watching them. Okay, plus the capital is very limited, so they know that narrative can't replace numbers for long. So they become more grounded in reality. They are more careful with cash. They are more obsessed with customers than conferences. So I
Hmm.
think these guys are very different guys. And I think nowadays, if you see, there's great success stories coming up in India from non-metro and those non-metro founders. That's the reality. Okay, because constraint. So non-metro founders live in constraints, and constraint sharpen your focus, so you don't burn very easily. You
Hmm.
pick up narrow segments, you build around your paying customers rather than chasing everyone. You kind of avoid shiny distractions. And also, uh, uh, you rarely see a non-metro founder kind of announcing every small milestone.
Mhm.
Okay, they're right there. So in fact, a lot of time, if they get exit also in non-metro, probably they'll throw a party and start working on the next venture, because they
Right.
don't want to come on your stories and on your TV channels. They know what they want to do. I think non-festo
Right.
founders are built very differently, because when the capital is scarce, clarity becomes non-negotiable. So I think non-metro
Mhm.
founders are more clearer, more grounded.
Great. Thank you. One founder habit you wish everybody had.
One founder habit, I think. Uh, so it obviously, as a founder, you need to have you need to build habits that can help your venture in multiple ways. But one, I won't call it habit, but I will call it a characteristic trait which is very, very important, is perseverance. I
Mhm.
think a lot of time, when you start a new venture, you're very hopeful and positive about it, but we all know that this journey is never smooth. Okay. And during those times, if your purpose is clear about why you entered this game, then you can play that game for very, very long. So I think this would be a key characteristic trait which will differentiate between a successful founder and the guys who will give up. So I think uh, to stay relevant, to stay, to keep fighting, you need a very different kind of mindset. So I think this is one trait which will stand apart. So I would, skills can be acquired, but this mindset, it has to be inside you. I cannot give you a motivational injection to get this right. So I think
Right.
if this quality is clearly seen in any founder, that founder is going to go a very, very, very long way.